It's indeed a privilege to have you guys. Good evening to us all. If you have joined and you're live, you can introduce yourself quickly by telling us your name and where you are watching us live from. Your name and where you're watching us live from. So I'll start. My name is Isaac Jonathan, popularly known as Crypto Joe. I currently stay in Kogi State. I kind of, yes, this is my state though. I was born and brought up here. So my name is Isaac Jonathan, also known as Crypto Joe. And so if you have joined and you are live with us, you can tell us your name, introduce yourself by telling us your name and where you are watching us live from. So we can get into the class real quick. Hello, if you are here with us and you have joined the live class, you can introduce yourself quickly, please. Your name and where you are watching us live from. You are welcome, Mr. Simon, watching us from Maiduguri. You are welcome. You're very much welcome. So quickly introduce yourselves, where you're watching us from, your name and where you're watching us from, so we can start quickly. So while waiting for others, let me quickly share my screen. So we'll start, then others will join and we'll continue. Let me share my screen. Okay, I've started sharing my screen now. So if you can see my screen, um, if you can see my screen, just type in the comment section that you can see my screen and you can hear me audibly. If you can see my screen and you can hear me audibly, just type in the comment section that yes, you can, then so that we can continue right away. Okay, that's very good. That's very good. You are welcome. You are welcome. Every one of you are very much welcome. Okay, you can see and also hear me very well. Okay. That's very good. That's very good. Okay. Um, welcome to once again. You're very much welcome to another live class here on crypto based media. Um, it's a privilege to be among you guys. Thank you for coming out and making out time to be in this live class. So, like I said before, some of you came in. My name is Jonathan Isaac. popularly known as Scripted Joe, from Kogi State. Um, so, in the main reason why we are here is to we are going to be talking about mastering support and resistance. Like this is like the second um, session, or like second part of it. So we are going to be talking about and mastering support and resistance. Like this is the second part of it. In the first class we talked about um, most of the basics, like some of the basic concept or basic things about support and resistance, like those things that you need to see on the chart um, before you mark your support and resistance levels, um, confirmations, and how to verify or how to like know that your support and resistance levels are valid, and some other things. So we are going to be talking about some of those things, like in the course of this live class. Some of those things that were said in the first part will be shared here also, but not much detailed, like broken down like um, the first class we had. So if you were not available on the first class, there is a recorded version of it. So you can go back, you can check in this channel, you can see it. You check, you see it. The first part of the mastering support and resistance, you see it there. So without wasting much time, let's get right into it. So today we are going to be talking about mastering support and resistance, how to draw valid support and resistance, how to know if it is valid enough to use for your trading, to trade, and how to confirm entries and take action. So, support and resistance is basically key levels that um, helps you to know that okay, a particular coin is going to rise from this particular level, or is going to like dump or come down from this um, particular um, key level. So, part of the things that you need to see um, based on that strategy is multiple rejections. When you see that okay, on a support floor, you see that price has been rejected many times from going downwards from that level, and it keeps whenever it comes to that place and visit it, it always goes up to the upside. So um, you kind of have that confidence that yes, this is a valid support floor, because it has several rejection, like rejecting price to go downwards, always supporting the price, and it always goes up. So that's one of the criterias in identifying a valid support flow or a valid support or resistance. Number one is multiple rejections using candlesticks. So I'm going to go over to my charts now. I'll go over to TradingView to explain and also show us how to draw a valid um, support and resistance, and some of those things that you need to see on the chart before taking action, and some other things. Okay, wait. So while we wait for that um, page to load up, I'll just kind of explain it more again. So support and resistance is just like every other strategy, but support and resistance is kind of like um, a key level based strategy that shows you that okay, from this particular level, price has been it has been rejected from like two and above times. And from this particular to the being rejected from going to the downside, or that's for the support now. And then for this resistance key level, price is always being rejected from going upward. So once you see multiple rejections like that um, on some a range, like a particular range level, you see that um, scenario, then you can mark out your support and resistance on those rejected areas, or rejected price areas uh, below the current market level and above the current market price. Then you have your valid support and resistance. Then you can trade within that price range or price movement, letting you take long or short trade, or long and short trade, if you uh, master the technique and the basics behind it. So I'll just kind of wait for. I don't know why this is taking long. I want to open my trading view, then show you how to mark a valid support and resistance. I think I'll just open this on a new tab. Okay, very good. Okay, for while we wait for it to come up, for those of us that cannot see uh, the screen very clear, you just go to your settings on you go to your settings on your YouTube. Then on that settings, you go to um, video quality. I think you go to video quality or display. You will see higher picture quality. That's I think that 1080p. Yes, it's on 1080p. You put it on that particular setting, then when you come back to it, it will be more clearer than it's showing right now. So I'll just open a particular chart to illustrate that support and resistance. Still loading, still loading, still loading, still loading. Okay, okay. So in this particular pair, this is AXSUSDT, a crypto pair. So in this example now, you can see very clearly that price got here, went up from this particular area, like it got rejected from going downward. It came back to that particular area, went up again. It came back down to it again and went up again. Now it's coming back to that level. So you have seen one to two to three, getting to four rejections now on this particular level. So once you mark out your once you come to the chart and you see something like this, you just mark out your you can see this is a valid support level now, because we have because a valid how to know a valid support and or resistance level is number one, to see two and above rejections. Just like we have seen here, we have seen up to like more than two rejections. We got one, two, three, up to three rejections. So on this resistance area too, we have multiple rejections. Okay, I think yes. So you can see very clearly now. From here, price um, got supported, went up to this resistance, it came back down. Let me name this. This is our support floor. Now this is our resistance. I hope you are all following. Okay. I hope you are all seeing the screen and you are following. I just opened this AXS chart on my trading view. I hope we can all see it and it's clear enough because we are going to be using this chart and the previous price movement uh, at the left hand side to explain some of the basic things about support and resistance. So if we are following and everything is clear, you can just indicate in the comment section so that we can get right away into the remaining part of this class. So are we all following? Are we still together? Hello. Okay. That means we are good to go. I can continue, right? Okay. All right. Let's continue. So you can see very well from this particular example now. We saw one of the criteria of valid support or resistance, key levels. In this particular example, we got like one to three rejections. In this area, we got one, two, three, up to the fourth rejection. Oh no, shouldn't have done that. Okay, you can see this is our support floor, this is our resistance floor. So now, before once, for example, let's say you come into this chart and you see something like this now, you see something like price came down to our support. You can see this rejection week here. Price got rejected by this week, showing that there's enough orders, buy orders resting at this particular zone. That was why it was strong enough to push away sellers up to this particular candlestick level it is now. So if you want to like take a trade on this particular support floor now, because it's currently at around the support floor, so you'll be like anticipating to take a long. So maybe if you want to uh, follow this particular movement, that is when you go down in time frame for confirmations. Like let's say you check the 1 hour time frame now. Very good, very good, very good. Let me make this a bit smaller. So you can see our 1 hour time frame is still in agreement with our 4 hours time frame. So you can see, let me use this. Immediately price got to that support level, it got rejected by that week there. And this massive red candle closed at this particular area here. Then immediately um a red candle opened, started, price came down, sellers were dominating up to this particular level here. Immediately they got immediately price came down there, the buyers kicked into the market and then pushed sellers away up to this particular level. Let me even zoom in very well so that you can see it. So I was talking about this rejection week now because of a lot of buy orders resting at this support area here. Price got there and was rejected by this massive um, candle week here, or rejection week. So I was talking about this massive red candle. A red candle or a selling candle opens at the bottom and closes at opens at the top and closes at the bottom, and it has the top, the bottom, the high, the low, the open and the close and the body. So this particular example, this massive red candle now opened immediately as this green candle closed. The next candle there was a red candle that opened, came down up to this particular level. This is the low, because this is the lowest point of the candle. This is the low. Now, buyers kicked in and pushed sellers away up to this particular moment. It closed there. So if you are to describe this candle, this this very top here is um the open, or the open is the open, and it's also the high, because there's no wick there to call it the high. Since there's no wick, the open is the high. Then this one that has a wick now, this one that has a wick, since the wick is the lowest point, this is the low. Then this is the close, because it closed there, immediately closed there. This is the last part, last um, price movement before the candle closed. Then another red candle opened. Buyers kicked in and pushed sellers away. Then a green candle formed immediately from that. Um, from the point the red candle opened, um, the green candle went above that open of that red candle. Then it turned to a green candle, closed there, another one open. So what I'm trying to say is that if you, if for example you come to this chart and you want to take your action, you wait for a pullback. You have seen the confirmation by um, this rejection week. When it came to our support, it got rejected by this rejection week, or rejection can week, yes, by this rejection. So if on a basic level, um, if you want to take trade on this particular pair now, this is exactly what you do. You pick your long position to, once, if the price was at this range, you take a short there and use the next key level as your take profit. So what we are going to do now is, since it's still at our support level, we'll take a long from here, then anticipate it to get to this take advantage of the move up to this next key level, which is our this key level here above our support, which is our resistance level. So this is exactly how it's going to look like. You pick up your long position too. When you open your trading view on your phone or laptop, on your laptop there are some symbols there. There are those icons there that are on the laptop. Then your phone, you click on the pencil icon, you scroll down, you click on positions, you see um, long and short positions. You add them to your favorite. So on this particular trade now, this is how it's going to be. So you wait for a pullback, you place your entry on your key level there. But some people like to use the open of that green candle, since it's a clear indication that buyers have kicked in. Some people place their buy here, wait for a pullback, then buy to that particular object. So in this scenario, we would like to do something like place our stop loss here, then take profit at our next key level, which is our resistance area. So on a basic level, or on a basic stand of support and resistance, this is exactly how it should be. Yes, this is exactly how it should be. Now, for example, let me use this particular area here as an example. And sometimes you might not see a rejection immediately as a rejection week on your key level, be it resistance or support. But once you see that it doesn't close below your support or resistance range, once it doesn't, had it been this candle here close below our support line here, then we can anticipate that okay, our support is now resistant, then we'll take a short from there. But it didn't close below it. Instead, it was a week, showing that sellers lost control and buyers was were still in control. So if we are going to take this trade now, this is exactly how it's going to be. Our entry being 2.433, stop loss 2.373, and our take profit 2.665. Or if it gets to somewhere around there and you are happy with profit, then you can take profit. So this is exactly um, the basics on support and resistance. Another thing is over time your support might get broken. Like if it gets weakened and it might get broken, and then maybe sellers yes, over time sellers might get control of the market and start pushing price to the downside. In that area, when you see that candles close, a candle or series of candle close below your support, then that your support has turned to resistance. What you now do is anticipate. Let me draw something like this. You get a push close below your support, then what you have to do is get ready to like take you wait for a pullback. Since you get your support is now broken, it's now a resistance. So that um, your support is now resistant. It has now turned to a resistance floor. So you wait for a pullback. You don't just join here to take a shot. You anticipate market to come back to that your resistance, your new resistance now. Then you take the market. Uh, you follow the movement, taking the market to the next um, valid key level, which might be a new support below that your new resistance, which was your support level before. So that's just basically it. And that's for support turning to resistance. And in another scenario, you might have uh, a resistance turning to support. That is when you get um, I say a candle or series of candle closed above your resistance level. Then what you have to do is wait for a pullback back to that your resistance, which has now turned to support. Then you buy up to the next uh, key level. So that's example of support and resistance, and resistance turning to support. So I hope you are all following. So I hope you're all following. Did anyone catch any of that? Okay. Someone is asking if I can re-explain how to draw those lines around support and resistance. Okay, let me go back to the chart. So let me go back to that for hours. So before I drew the lines, before I drew the support and resistance, immediately I opened the chart. Like this, I didn't intend to even use this pair for this class. No, I just opened my trading view and just saw that okay, I saw this in my search history. So I just opened it. So immediately I came to the chart and I saw this. Once you have the knowledge of these things, you might not necessarily need to be drawing lines. You might just open your chart and then you see based on your trading plan, because this is what you should see on the chart before you take action. So when I came to the chart, I saw that okay, price came here, it went down, wasn't able to go above that level. it came down to the support again. That is the first time, the second time, the third time here. It came back again. The this second time for the resistance, price got rejected. Third time for the support. Third time for the resistance. Now the fourth time. So we are to take advantage of this move to long the market up to our resistance level. So you can draw your support and resistance using rectangle tool or trend line. So in this, um, if you want to use trend line, this is how it's going to look like. Basically, you have to draw it from the rejected price areas. Yes, you cannot just use you can't place it like this. It's not accurate. You put it on the rejected price areas. So you have something like this. This is one. Supposed to be something like this. This is your resistance. Now for your support, you focus on the three most rejected price areas, which is something like this. So you place your support. The reason why I love using resistance to rectangle tool is because it kind of capture major areas. The trend line is just basically lines, but it's good to use trend lines also. But I love using rectangle tool because it kind of I like using it because I don't know, I don't have major reason why I love it, but I kind of love using rectangle tool. So if you want to use trend line, you focus on the three most rejected areas, then you draw your lines. And for the resistance also, focus on two to three most rejected areas, then you draw your lines. Then if the price is at this level, you will use your 4 hours or 1 hour lower time frame to get the confirmation, take a short. For the long, you take for the support, you take a long. So that's just basically it about support and resistance. Then if you get a break, like your support gets broken, that's an indication that your support floor might turn into a resistance, take market downside. And if your resistance gets broken by a candle or a series of candles gets broken above it, that's an indication that your resistance might turn to a support floor, taking the market up from that particular area. So that's just basically it about it. So do we now understand it? Support and resistance turn to support, and support turning to resistance. Are we now following? You might be hearing some background noise. Sorry for that. I'm currently not at home. I'm using my cousin's house, so you might be hearing some background noise. So if it's too noisy, I'm very sorry. I had to be available for this live class, and I don't want to disappoint. So sorry for the background noise. So are we good to go now? Can we move ahead? So let me go over to the left hand side of the chart and show us an example of uh, resistance on support and support on resistance. So coming to the chart here, I saw something like this. Then this one. See, this is why I love using rectangle too, because kind of makes it look smooth. So you can see on this particular price range now, we got a push from this side to the downside, from here to the upside. Then from here, we price hit our resistance, came back to our support. Now was about going to resistance, but kind of made a ranging market here. Then poof, we get a break above the resistance. Then what did price you can see after breaking this after we got our resistance level broken with that massive bullish candle, we got a pullback back to that area, and then you can see our resistance is now support. We got this uh, we got this new key level. The price got to, it came back down. You can see if you extend this your resistance line now, you can see that it's a new support. You can see this first example I gave you that this was our support. You can see it was the resistance key level that it was before. Now the nature has changed from resistance to the support floor. You can see we got a break above resistance, that massive candle, bullish candle, a retest, formed this new key level, came back to that new support, new resistance, got there, came back to support, got there, came back. So we are now anticipating to take a long based on these few criteria we have seen, giving us confidence to take a long from this our new support level up to our resistance level. Then if we get a break like we saw in this scenario, then this our support now will not turn to a new resistance level. Then we'll take a short from here, then target here as our new support floor for take profit. If we get a break below this support, we will anticipate to take a short from here, take profit here, or if we get a break if we get a break from here above this line, then we anticipate to take a long from here up to the nearest key level. So that's just it about support and resistance turn to support. You can see on this particular view, you see the resistance, support, resistance got broken, turn to support, new resistance being formed, price got supported, came back there like multiple times. You can see multiple rejections. Then now, based on the information we have gotten, the data we have gotten from here, we want to take a long to from our support to our resistance now. So that is about uh, support and resistance. Resistance turn to support, and support turning to resistance. So uh, okay, you can use Bybit exchange to analyze. You can use any exchange at all. If your exchange allows you to have that at least um, a bigger view, even if not that big, like your phone on a trading view on your phone or laptop, you can use your exchange like Bybit now. Like someone like me that uses Bybit now, you can use the exchange chart to like go back to the left hand side and see what price has been doing. Then you can have that full confidence to take um, action on, because a technical analysis is just about going back to the left hand side to see what price has been doing, so you can know what to happen on the right hand side, like the current market move, that so you can have that full confidence to take action, either to long or take whether to take a long trade or a short trade. So you can use your exchange. Yes, you can use Bybit. Maybe you don't have, maybe sometimes network might not be as strong as it should be to power your trading view. You can use if you can have access to your Bybit, Mexi, Binance or whatever. You can use, because those exchanges to have uh, those tools, those trend line, uh, rectangle, horizontal ray, horizontal line, and what have you. So that's just about it. So um, lest I forget, for those of you that are more uh, conversant with Bybit, exchange. You can use the link sent in the groups. You can use the Bybit link sent in the groups to sign up, have an account, then um, follow us up with whatever we are doing here because um, most traders do use Bybit testing. So if you do yourself good by signing up with that link in the groups, have an account, then so you can be able to follow us up well with whatever we will be doing on the live classes we'll be holding here on crypto based media. So for a more follow up, just click on the link, sign up, have an account, then um, even if you don't fund the account, you can be using the demo to be practicing. And if you can fund the account, that would be very good as well. I believe there will be some rewards for those of you that will fund the account after creating the account. So that's by the way. So um so like I was saying, if you want to take action based on the information I've gotten here so far, you kind of uh, you kind of take a long from this particular area to this area here, from our current support to our resistance level. So this is how. Let me go back to that 1 hour time frame. So this is how it's going to look like. Longing from support, shorting from resistance. Then when you long from support, you use your resistance as take profit. And when you short from resistance, you use your support as take profit. So that's that about that. So if you have any question, you can drop them in the comment section. We'll get them answered before we call it a day. Okay, someone is asking if how he or she can place the TPA and SL box. Okay, let me open my Bybit. Let me open my Bybit. So well, I'm going to log into my Bybit now. Then we'll use this particular um, analysis we have done on this AXS care. Then we'll kind of take the signal on our Bybit using our entry, stop loss, and take profit. And another thing, we are going to be working on our stop loss percentage. This risk management part now. On this particular pair, long trade now, we are going to take. We are going to be working with majorly. First of all, we're going to working with the stop loss percentage to get our order value. We are going to place on Bybit. Then after that, we place our entry, stop loss, then take profit. Then adjust our leverage to make sure that our liquidation is not on same as our stop loss. Our liquidation is not close to our stop loss or below above it. Then we'll take our trade. So I'm going to log into my Bybit now. So I kind of moved um, my USDT to my Super X exchange because I kind of have there's something I needed to do on that exchange. So most of my funds are in my Super X exchange. So for the purpose of this class, I if I can get the demo account here, I'll just use I can get the demo account, demo, trade, futures. Mm, mm. Yes, there is going to be a recorded version of whatever we are doing here. So if you were not early enough when we started, there are going to be a recorded version of the class. So when we are done, you can always come back to the channel and you will see the video. You will see the video there, and you can watch it at your disposal. Okay, I was talking about support and resistance, Mr. Tomiwa. I said you long from support because when price comes to that area, it's always been supported to the upside, and once price comes to resistance, it's always been resisted, just like the name resistance, resisting it from going up and then price coming down. So you long from support and then you short from resistance. Then you set your stop loss a little bit below your resist a little bit below your support you are longing, then a little bit above your resistance. You need to give your trade setup. You need to give market a little room for it to breathe. Sometimes it might just come down a little bit before going your way. So you set your, like in this example now, you can see our stop loss is not too close to our support level, so it at least is far lower than you can see. So you shouldn't set it too close because sometimes it might just come close to that area and then before going your way. So you give it a little room for it to like breathe before pumping to the upside. So um, I don't know if I can get the demo account here. This is very complicated on system than it is on phone. Very, very complicated. Okay, let's change the pair to once you open your Bybit, you click on whatever pair you see. Most times it's usually on BTC. So you click on that three line, then you search the coin there. For this particular example, we are on AXX USDT. Now on your mobile phone, once you search a particular pair, you are going to see some on perpetual contract and some on spot. Now you look carefully. On your mobile phone, you will see USDT perpetual. You look below that particular pair you have searched. Try and make sure you see USDT perpetual below that pair, then you click on it. Then on your laptop, you see it in two sections, perpetual and spot. So you click on it. This is AXL, this is ASTR and AXL. For this example, is AXS. So you click on it, then it will change from whatever pair you met it to the pair you searched on it. So what you are going to do now is Once you open your Bybit and you have set it to the pair you want to take the long or short trade on, the next thing you have to do is make sure that it's on isolated and not on cross or portfolio or mix, whatever. So make sure it's on isolated. Make sure this one is on limit. A limit order is an order to buy or sell at a given price or better, meaning you are telling Bybit to activate your position. Once, for this example now, we are telling Bybit that okay, once the price comes back to that our uh, entry level, which is 2.433, you should activate a buy position for us and then trigger our either our stop loss if it goes against us and our take profit if it goes in our favor. So the next thing after confirming isolated margin limit, the next thing you have to enter in the first box is entry, the second box is value. Now this value in your mobile phone you see order price or order value. So this order value, what you have to type in here is what I'm about to explain now. So to get your value or order value, the first box is your entry. That one is our entry is 2.433. So to get what you have to type in is second box now. What you're simply going to do is you, after analyzing and placing your long position to, because in this scenario you want to take a long. So what you have to do now is you set your long, your entry, your take profit, and your the area you want to set your stop loss. So what you have to do now is on your stop loss area, there's going to be some digits in bracket. In this example, we have 2.47 percentage. This is our stop loss percentage, and it works hand in hand with whatever amount you are risking on that trade to get your order value. So, for example, now we want to like risk, let's say we want to risk $5 on this trade. So, what you are going to do now is you are going to divide 5 by 2.47 percentage. So quickly, someone can just help us to calculate. Divide 5 by 2.47. Then you put the percentage symbol on your calculator. And whatever answer you get before the decimal point, you just type it in the comment section. Any one of us can do it. Divide 5 by 2.47 percentage. There's no required ratio of SL and TP. Basically, what you do is you set your take profit and your SL at a particular level. Then you look at that middle number. You see something like risk reward ratio. For this particular trade, our risk reward ratio is 3.87, which is technically 3:1 or 1:3. That means whatever amount you are risking on this trade, you are going to be making three times of it. If you risk 5, you get 15. If you risk 10, you get 30. If you risk 2, you get 6. If you risk 100, you get 300 back. So three times whatever amount you are risking. So on this particular trade, you are risking 5 USDT. So if you multiply 5 by 3, it will give you 15. So before that, let someone divide 5, which you are risking on this trade. 5 divided by 2.47 percentage. Quickly, please. Time is against us. Divide 5 by 2.47 percentage, which is our stop loss percentage. 2.47 percentage. So the basic idea behind it is that that's just the formula. The formula is whatever amount you are going to risk on a particular trade. Once you are done analyzing, check your SL area. You'll see some some digit in bracket, and it's always on percentage. So in this particular example, it's 2.47 percentage. I want to risk 5 USDT. So you divide your risk amount by your stop loss percentage. In this example, is you want to risk $5. So 5 divided by 2.47 percentage. So quickly, please, someone should help us calculate it. 5 divided by 2.47 percentage. Well, okay. I have my phone here. Let me calculate it quickly. 5 divided by 2.47 percentage. Okay. The answer is the answer is 202.429 whatever. So our other value is 202. That is 202. You pick the value before the answer before the decimal point is what you are working with. So in this example is 202. Those of you that did the calculation with me, you can see in your calculator that you have 202.42 blah blah blah. So you work with 202, the digit before the decimal point. So 202 is your other value. How did you get it again? I said you divide whatever amount you are risking by your stop loss percentage. And I said on this trade, for example, we are risking $5, so you divide it by your stop loss percentage, which is 2.47 percentage. If you are to risk $2 on the trade, it's still the same thing. Just divide that two by 2.47 percentage, and it will give you 80, which is your other value. If you are risking $10 on the trade, you divide 10 by 47 percentage to give you 404. So in this example, we are risking 5, and our other value is 202. Now that 202 is what you will type here. You see that 202 is what you will type here. Then the price is your entry 2.433. Price 2.433. Your other value is 202. Yes, 202. Then you activate your SL, your TPSL box. You activate your TPSL box. Our take profit now is 2.665. 2.665. Then after placing your other value you got from your calculator, you fix in your take profit, your entry, your take profit, and your stop loss, your entry and take profit. So our SL is 2.373. 2.273. Sorry, what am I typing? 2.373. 2.373. Very good. Now, if you check my screen very well, you can see this is just basically it. This is just basically now. Let's say let's change it to 10x leverage. Why is it not changing? 10x leverage. So, for example, we are using 10x leverage. This is our entry 2.433 from our analysis. This is our other value 202. And how did we get it? I told you that you divide your risk amount, that is the amount you want to lose as stop loss. You divide it by stop loss percentage on trading view, that is the one in bracket. And we got 2.47 after adjusting our stop loss to that particular area. We got 2.47 percentage. So if you have bigger capital, you want to risk $10, just divide it by your stop loss percentage. If you are risking $1, divide it by your stop loss percentage. Whatever answer it gives you on a calculator before the decimal point, that is what you type here. The second box on your trade, most especially Bybit. So um, most of the time I'm going to be using this Bybit. Like I use Bybit a lot. Just that this evening I have something to do on my Super X exchange, so I move most of my USDT there. So you can see based on that risk reward ratio, like 3.87, almost 4. So we are risking $5 on the trade. Now if you multiply 5 by that 3, because you are risking $5, our risk reward ratio is 3:1. I told you risk reward ratio is amount you are willing to lose versus amount you are going to make. And our risk reward ratio is 1:3. So we are risking 1:1 of uh, whatever amount we are going to lose, and we are going to make 1:3 of it. So we are risking $5 to make $20 technically. So this is it. Expected loss 4.9815. If you approximate it, will give you 5. And expected profit 19.2618. This is just basically $20. Maybe they reduce it because of closing fees or funding fees, whatever. So that's just it. So once you are done, they won't allow me to click either of this button because I don't have USDT here. So what you do is after clicking on, because you want to take a long, you click on long, then a particular window will pop up on your uh, PC or on your Android phone. Then you see two colors. You are to focus on two digits. And the one in yellow color is your liquidation. The one in red is your stop loss, and it will show you your stop loss digit, which is 2.373. So on that pop-up window, you have to focus on two digits. The one in yellow is your liquidation price, and the one in red is your stop loss price. Now, I want to say something real quick. If you are taking a long, make sure if you are taking a long trade, make sure your liquidation price, and what I mean by price is your digit. Make sure your the digit of your liquidation, that your liquidation digit should be lower than your stop loss. Now we have 2.373 as our stop loss. Now, once before you click on buy, and before you click on the confirm button on that window, check the yellow color. It should be lesser than this your stop loss digit. If you have something like if the yellow color, that is the liquidation price, is something like 2.2, you are good to go. 2.1, you are good to go. But if the liquidation is like 2.4, then you are at risk of losing the actual amount you are entering the trade. Like for this example, you are entering the trade with $13. If I didn't set my leverage very well and my liquidation price is higher than my stop loss, instead of it being lower, because on a long trade, your liquidation should be lower than your stop loss. That is, your stop loss should be above it. So if our liquidation is 2.4 now, that means my liquidation is higher than my stop loss somewhere here. So if the trade comes to our entry and didn't start going up as planned and start coming down, it is my liquidation price going to meet first before my stop loss. Thereby, I'm going to lose the whole of the $13 I'm entering the trade with instead of 5. But if I use a reasonable leverage, if you reduce your leverage, the more you reduce your leverage, the further your liquidation will be away from your stop loss. That's why most of the time they do tell us that if you are starting out, use 10x leverage. Use 10x leverage. Um, if you are starting on a lower capital, you start from 5, then increase it as you are gaining experience and growing your account. So for this example, we are using um, 15x leverage. So let me see if I can calculate insufficient available margin. So it won't allow me to do anything from apart from this level. So in your own end there, because you are taking a long now. So if you click on this buy, you see it won't allow me. So if you are taking a long now, for example, let's say in your end there you are taking a long also. Now after imputing your entry, this is your price, your entry, then the value, other value. You divide your risk amount by the stop loss percentage, you get your other value, place it there, activate the TPSF box, put your take profit, put your stop loss. Make sure that the expected loss is what is particularly what you want to lose. Then your take profit also is correct. Then you click on buy or short. Long is for buying and short is for selling. Once you click on, for example, you want to long, make sure that when the pop-up window comes up, make sure that the digit in yellow color is lower than your stop loss. You already know your stop loss is 2.373. Once you click on this buy now and the window comes up, look at the liquidation price in yellow color. Make sure it's lesser than this digit. Whatever leverage you use and the liquidation price is lesser than this, just click on the long, click on the confirm button. You are good to go. But if the yellow color is higher than this, since you are taking a long, if the liquidation digit, the one in yellow, is higher than this, reduce your leverage. That's just it. reduce your leverage from 10 to 5 or 10 to 8, whatever, whatever. Same also to um, short trade. So if you are taking a short, your stop loss should be lower than your liquidation. Reason be that if you are taking a short trade, for example, let's say you are taking a short trade, for example, no, this is not a short position too. Very good. So if you are taking a short trade now, this is your stop loss. Now from your entry, it came there, it should start going up as analyzed. But then if it doesn't go your way and start going up, the first order you should take is your stop loss order. Now this is the reason why we are saying you're in a short position, in a short trade, your stop loss should be lower than liquidation. Now this is it. Imagine this black line as your liquidation price and this is your stop loss. Now from your entry, it doesn't start going to your direction, it start going against you. If it hits your stop loss first, you will lose a particular amount you set to lose before coming to your liquidation uh, area. Same also for the, let me clone this, for the long now. This is just basically what I've been saying. If you want to take a long, make sure that your liquidation price, that is that pop-up window now, after inputting your credentials, clicking on long, you want to take a long, click on long, a window will pop up. Check the digit in yellow color and your stop loss. Make sure that your stop loss is higher than that digit in yellow. That is because your liquidation should always be lower than your stop loss, because from your entry, if it doesn't start going up and start coming down, it's your stop loss order you should trigger first, taking out that little loss before coming to your liquidation. By then you're already out with your little loss. So your stop loss should be your stop loss should be higher than your liquidation in a long trade. Your stop loss should be lower than liquidation in a short trade. In a short trade, your stop loss should be lower than liquidation by checking that confirmation window. When you click on short, check your confirmation window. That your stop loss should be higher than the one in yellow color. Then um, for the long trade, make sure your stop loss is higher than your liquidation by checking that confirmation. When you click on long, check the confirmation window. Your stop loss down, the one in red, should be higher than that one in yellow. Then you click on confirm, you place your order. Then when the trade gets triggered, then if it goes your way, you get kicked out and take profit. If it goes against you, you get kicked out at your stop loss, losing that particular amount. For this trade now, out of $13, we are going to lose 5. Then 8 will be dropped back to our balance. Then that's it. Then we're ready for the next trade. So that's that about uh, that. So I believe we have said much about support and resistance, resistance on support, support on resistance, risk management, how to place your trade on your Bybit or your exchange. Um, Talking about stop loss percentage, entry, stop loss, take profit, and some other things. So we're going to do a quick recap now. So I said yes, very good, Mr. Akofit Ventures is 202. Most of you that got 2 point something is because you didn't put the percentage symbol after dividing your risk amount by your stop loss percentage. So um, um, limit, Mr. Tomiwa is asking, what does limit order means? Okay, limit order is simply sell stop, sell limit or buy limit. That simply means that since you are doing your analysis, for example, okay, you want to take a long, let's say you want to take a long from this particular area here. Now you are done with your analysis, you get your entry figure. Let me take this out. You get your entry figure, which is 2.433, your stop loss and your entry based on this long position that you fixed in. because it will give you your 3 digits that you are going to fix on Bybit. Entry, the one in ash or black entry, the one in green take profit, the one in red stop loss. So after doing that, you place these digits resistance zone. So that's basically it about limit. Limit is simply waiting for price to come to your point of interest, a particular level. Then your trade will get triggered. Then you are in the trade. You are in the trade. Then you set your after setting your entry, your stop loss and everything. Once your trade gets triggered, then you start going your way. Then you be in profit, and you get it out with little loss. With little loss, if um it goes your way. You use your hand to set that stop loss. Okay, I want to lose $5, I want to lose $10, I want to lose $1, I want to lose 0.5 based on the 5% of your capital. Yes, I forgot to say something. Always know the 5% of your capital. Like always risk 2 to 5% of your capital, which is very important. 2 to 5%. Like someone like me now, I can stomach 5% loss of my account. Yes, if I'm running a $50 account, 5% is $2.5 on every trade on that account. If I'm running a $100 account, I should set $5 because 5% of $100 is $5 per trade. 5% of $200 is $10 per trade. But if you cannot stomach $10 at loss, you can reduce it to 8, 7, 5, whatever. That's when that 2 to 5% risk percentage comes in. Always risk 2 to 5% of your capital. If you cannot stomach 5%, risk 4%. Cannot stomach 4%, risk 3. Cannot stomach 3, risk 2. You cannot risk 2, you can still risk 1, but that 1% will be smooth on a bigger capital, like the bigger account. Yes. So the higher the capital, the lesser your risk tolerance should be. So that's just basically about it. Mr. Can't really get your name now. So we will do that on our next explanation on hopefully part 3 on support and resistance. So we have stayed too long on this class. I've been talking and talking and talking, getting tired already. So I believe and I hope that much has been said about support and resistance, resistance on support and resistance, risk management, how to place loan about it, and whatever. So if you have your questions, you can ask them in the group. You drop your questions in the group, you'll get them answered in the group. If you have questions, drop them in the group, you get them answered. And if you have questions on when the next class will be, that will also be answered too. So at this junction, I would like to say a very big thank you to every one of you that have come out in your numbers to attend the live class. It won't uh, it won't be a thing of success if I'm the only one out here. So you we need each other to make it a success, and we thank God for how far we have come. So at this very point in time, I would like to say a very big thank you to each and every one of you that took out time, squeeze out time out of your busy schedules. I know even if it's night, some of you might still have something doing, but you devoted like 1 hour of your time to come out to grab one or two idea or knowledge based on the topic or the subject matter. So thank you very much. At this junction, we have a close. So good night to you all. Have a wonderful night rest. So see you next in the next live class we'll be holding. Thank you very much. Good night from here.